Hey everybody, it's CryptoOneStop. In this video, we're basically going to go over how I got wrecked a few months back and what my comeback plan is. And we'll also cover how I'm going to make a shift to the content that I produce. In fact, I'll give you guys a small sample today. So to begin the video, let's go ahead and cover how I got wrecked. It was basically a hack. I had a cybersecurity expert look into the hack, and he said it was one of the worst hacks he's ever seen. He said it originated from a group called Lazarus, or at least that's who he believes did it. And this group apparently has hacked central banks before. They've hacked large companies. I mean, they have a very notorious reputation for what they do. But anyhow, I just wanted to go over the hack with you guys real quickly so you guys can avoid losing money like I did. So what happened was back in February, March, I was looking through my emails and I decided, you know what? I haven't done many promotional videos. In fact, I get so many promotional offers despite being a small YouTuber, and 99% of the time I just ignore them. And that's partly because I invested in crypto super early and I made multiple 100x investments. And financially speaking, I was doing pretty good. And given my net worth, I didn't really feel like it was worth my time. I mean, the promotional offers weren't that big. I mean, the average that I was being offered during the peak of the bull market was 1 to 2,000. Now that's super small relative to like what the larger channels get. They can get anywhere between $20,000 to $50,000 per video. And so anyway, I figured why not extract as much value as I can from the space. And also at that time, the market had come down. And so I was looking through my emails. I clicked on an email and I downloaded what I thought was a promotional image that I would insert into my video. After downloading the image and responding to the email, I had to go to work. And on my way to work, I was getting notifications on my phone. So even though I thought that was super odd, I just kind of brushed it off and thought maybe it just came in late. Like I got the notification a little bit delayed because I did do some transactions that morning. But when I got to work and I opened up Magic Eden on my phone, which is basically a marketplace for Solana NFTs. And so what I noticed was that my NFT was on the front page because they have a section on the page where NFTs that are selling for a large dollar amount get featured. And so I'm looking at my NFT and I was 100% sure that I didn't post it for sale. And then I realized, you know what? Oh my God, I've been hacked. Because I did have some of my NFTs on a hot wallet, which is basically a wallet that's not connected to a hardware device. And these guys not only got access to my computer, but they went through all of my files. Not only did they get all my private information, they got all my private keys. Luckily for my hardware wallets, I didn't have any of the seed keys in my hard drive. And back in the days, I used to just disconnect my hard drive after I was done using it. And because I was so comfortable with my setup, given that I hadn't been hacked before, I just left my hard drive plugged into my desktop. So these guys were able to access all of that information in addition to my personal information, and they cleaned out all the wallets. I had my Trust wallet, my MetaMask, my Phantom wallet, and it was over 50% of my net worth at that time. And it was heartbreaking because I was going to use that money to retire from my 9 to 5 and use most of my free time producing content. So everybody out there that's listening to me, make sure you guys get a hardware wallet. Ideally, you want to go ahead and get a computer that you use strictly for crypto just to optimize the security. Because these guys not only got my crypto, they got my personal information that they used to hack into my bank account and managed to get $500 from there. I mean, it was just a pain in the ass to deal with everything. I went ahead and got a new computer, I got a new setup, I got a new desk, I had to call the bank and create a new bank account. To avoid all of that grief that I went through, make sure you guys get a hardware wallet where you keep most of your funds, and only use a hot wallet when you're transacting with a relatively small sum of money, where you need to make certain that you get the transaction completed fast as possible. For example, if you're going to mint something, that's probably one of the best scenarios where you would be better off using a hot wallet versus a cold wallet. Now, even though I had a major setback, I'm not a quitter. I still believe in the technology. I do think that even though there's a lot of fraud and a lot of projects go to zero, I think there's going to be valuable technology that gets produced from the space. And every time we have one of these cycles, we're going to get opportunities to make life-changing money. Now, the next cycle, I think, is definitely going to be harder than the previous two cycles, but I do think we'll still get those opportunities, especially to 10 to 20x. And I think we might even get some 100x opportunities, and I'll cover a few of them in a future video. Looking back, I realized that I got really good alpha from my community. For example, one of my Patreons told me about Hex back in January of 2020. And so even if I picked up, like, let's say a couple $1,000s worth of Hex, at the peak, it would have been worth almost $1 million. Unfortunately, I faded his suggestion, but that wasn't the only good recommendation that I got from my subscribers, my community. I had people tell me about Tomb Finance super early. I had people tell me about Ohm very early. For example, I had the opportunity to participate in the early sale. I heard about parallel NFTs early. I could go on and on about the opportunities that I heard super early and that I faded. Now, I got all of that information despite being a small tuber. And so that got me thinking, why don't I take the alpha that I get and share it with the community so we can all benefit? And hopefully that'll attract more alpha hunters out there that'll become part of the community and that will ultimately benefit the collective that I'm forming. And so part of that involves doing Twitter spaces on a weekly basis or a bi-weekly basis. I'm going to cover some of this stuff in a newsletter, and obviously I'll be producing videos. Assuming I have the time, I'm going to try to make 2 videos a week. One video that covers TA, macro, GameFi, DeFi, or NFT project. This way you're introduced to new projects, you get a general view of the market and its trajectory. Because during this last cycle, I really regretted not learning more about TA. The guys that were able to sell the top saw a change in market structure. And so while everybody else was bullish, some of the best traders out there were taking profits and cashing out. Now, I'm not a TA expert yet, but I have been learning about TA. I mean, during that last big leg down that we had from 30,000 to 20,000, even though I was trading with a small sum of money, I managed to make $40,000 in just a few days. And that got to my head and I started trading more frequently. And because I was trading on these lower time frames, I ended up losing a decent portion of the gains that I made. But anyhow, I'm going to be doing a little bit of TA every video. This way you can monitor my progress and also get my market insights. In addition to TA, some of the macro guys out there were also able to time the top. I mean, in November, when Powell said that inflation is running a little bit hot, that was a signal to a lot of these macro guys that the Fed is going to start raising rates. So they started to de-risk. Because historically speaking, when the Fed does raise rates, it's generally not good for risk on assets. And so if I was paying attention to the macro back then, I'm pretty confident that I would have also de-risked a little bit. And that's because instead of just reading small threads on Twitter, I ended up listening to a few of Powell's interviews, and I listened to one of his pressers where he was answering a lot of questions. And it became super clear to me that he was going to bring down risk assets in an effort to tame inflation. I mean, that was going to be part of his strategy. And just like with TA, as I develop my skills as an amateur macro analyst, I think there's a decent chance that you guys could potentially benefit from my insights, or at a minimum, you guys will be kept up to date. This way, we won't be blindsided in the next cycle in case there's a major macro tailwind that takes out the crypto market. All right, let's go ahead and dive into the TA. So I made about $40,000 on this move down here. Unfortunately, I got greedy, added to my position. And so I ended up not making as much as I could have because I had to close out here. I didn't want to lose all my profits, but I also ended up shorting here and losing some of my money as I closed my position here. And part of the reason I'm telling you guys this is so you guys can learn from my experience and the mistakes that I made. One thing I failed to realize is that this cycle has a diverse group of market participants, and we have a lot of different derivative products that we can trade. And when you have the market move down bigly in a certain direction, typically what you see is a lot of shorts pile on near the bottom. And whenever you have that scenario where there's a lot of people on one side of a trade, the market tends to go in the opposite direction, whether that's shorts covering or a process that's catalyzed or influenced by market makers. Now, with that being said, let's go ahead and cover where I think the market is potentially headed next. I think this here was probably a deviation from the range. And I also think that deviation was probably catalyzed by market makers. Like over here and here, I noticed that there was a decent amount of short open interest, or at least I suspect it was short interest. Because if you go to here to coin analyze, what you saw was an increase in open interest, while the funding went negative, which suggests that most people are going short. Now, after that last move up, you're basically seeing the opposite. The funding went positive. The open interest in the last 2 days did go up, but recently after this move down, a lot of that long interest was wiped out. But even with that open interest being wiped out, you can see that the funding is still positive. So you still have people betting that we're probably going to bounce. And my guess is that if we do end up getting a bounce, I think very likely that it'll bounce just a little bit above this range low here, and then we'll see a bounce to potentially 25, 26. And the reason I say that is that after we had this big drop down into this zone of interest, this previous zone of interest, filled in a lot of the inefficiency we saw here. The only inefficiency that I see left is about right here under 26K. So if we do end up getting a bounce, I suspect that that'll probably get filled in. I, unlike most other people, don't think that we have enough juice to get to 28 to 30, but who knows, maybe I'll be proven wrong. But anyhow, for now, I think that, we just wait and watch. If we test the range low again, I think there's a good chance we'll probably just break down to 15 to 16K. But if my theory is correct, this big move here was heavily influenced by market makers. My bad, guys. I actually had to redo the video, or at least the second half of the video, because it got corrupted. Anyhow, coming back to the video, we just had the FOMC meeting today, and leading up to and especially post FOMC meeting, we saw a sizable bounce. It looks like the market is eager to go risk on. Let's see how well it absorbs tomorrow's news. I think the odds are that the GDP is going to be negative. I mean, we saw Atlanta Fed's prediction, and also the White House is changing the definition of recession. If you didn't expect to have a negative print, you probably wouldn't be doing that. So it's highly likely we're going to get a negative GDP. If the market absorbs that really well, even a bear like me has to admit that's super bullish. So if that happens, I think we're probably going to go risk on for a couple weeks. I'm still macro bearish. I think ultimately wherever we break up to, whatever range high that we hit, I think that's going to be the local top. Following that local top, we're very likely to go lower. Now, before we head on to the next segment of the video, I wanted to go ahead and share this alpha with you real quick. In March, I noticed that Luna started rallying ahead of the market because I was watching the Luna BTC pair, and it was green for a while. And we also saw Luna alts lead the market as well. And I think that had to do with the fact that the lunatics were still in profit while most of the other token holders were probably in the red. And so basically that was the last pocket of strength in the market. In fact, and on top of that, Anchor Protocol made it super easy for Luna holders to borrow against their Luna. So that generated more liquidity, giving people that hold Luna more purchasing power. And the easiest way to speculate with that borrowed money was to bet on Terra alts. And that's why I think Terra alts were leading the market. And when people borrowed UST against their Luna, that expanded the supply of UST, burning Luna in the process, supporting the price. Now this time around, we saw Sol lead the market. Here on the 13th, you could see that Sol bottomed, and BTC didn't bottom until the 18th. So if you had Sol BTC on your watch list, in the sea of red, it would have been the only green on your watch list. But there's no guarantee that moving forward that Solana is going to lead the market again, giving us the indication or a leading indication that we're about to make a local bottom. But I would definitely add it to your watch list alongside BNB/BTC, and I would also add ETH/BTC. All right, we're going to end the video with my amateur macro analysis. This is a quote from Drunken Miller, who, by the way, is probably one of the best performing fund managers out there. I think his year-over-year returns have been 30%, and I wholeheartedly agree with this view. He said, "The ultimate fundamental driver of financial markets and trends is liquidity. The Federal Reserve is the ultimate provider of liquidity. Their decisions are the single biggest driver of price action." And I think this is something everybody overlooks. Now, when we're raising rates, that's going to make capital more expensive. That itself is going to limit the amount of capital entering the markets. So you can make the argument that it's actually withdrawing or keeping liquidity at its current level. And so if you believe that most of the action that we see in the financial markets is driven by how much liquidity is in the market, then at a minimum, you should be somewhat cautious or neutral at this moment, because the Fed is aggressively raising rates. Now, people look back to the 70s and say, well, we hiked, 5-6%, we hiked double digits, and, the market didn't puke. But the debt load back then, or the debt to GDP ratio, was much lower than it is today. We have a huge amount of debt. So if we raise the rate 0.25, 0.5, 0.75, that's probably the equivalent of doing like a 5 to 10% hike in the 70s. So anyhow, if you believe that, and you agree with my view that liquidity is what drives most of the price action, then take a look at this chart here. I thought this was pretty insightful. Max Anderson said, "So now that you understand net liquidity, let's take a look at how it correlates to asset prices looking back over the last 2 years." The chart down here plots net liquidity versus S&P 500 offset backwards by 2 weeks. And you can see here that when liquidity goes up, the price moves up, and when liquidity goes down, the price moves down right with it. So following that line of logic, Mark Anderson looked at more data, and he saw that from the 300 billion of liquidity added in the first weeks of July, about 140 billion was removed in the last 4 days, and this is dated 7/21. And you might be wondering, well, if liquidity was removed, then why are we going down? And that's because when you're in a bear market, you never move down in a straight line. And also when you have a low liquidity environment, it makes it very easy to move the price in both directions. And on top of that, you have passive funds that are dollar cost averaging. You have 401ks dollar cost averaging to the market. You have allocations being readjusted. For example, if you have a portfolio that has 60% bonds and 40% equities, if equities sell off and bonds remain relatively the same price, then your bonds or a portion of your bonds are going to be sold into equities. And so I think that's probably the main source of liquidity in the market, because in my view, I think a lot of retail investors are wiped, but you still have high net worth individuals who are bullish on the market. And for the last, I want to say, 2 to 3 decades, people have been conditioned to buy the dip because they inevitably get rewarded for it. They might have to be a little bit patient and wait, but if they wait long enough, they end up getting back into green. So again, I think that's where a lot of the liquidity is coming from. And so for that reason, I think, you see these big, quick moves up, often, double-digit moves up in the market, but inevitably you go straight down. In my view, I think that's likely to continue as long as liquidity keeps receding. And if you guys are interested in tracking the liquidity in the market, I'll go ahead and provide the links that the author here of the tweet, Max Anderson, linked here in his tweets. I'll go ahead and link that in the description below for you guys. Well, that pretty much wraps things up. Now, if you guys have been watching the video until this point, I strongly recommend that you guys check out my Discord. Right now, it's pretty much a ghost town, but during the bull market, during the risk on period, we did have a lot of activity here. People made some really killer moves. A few people in my Discord recommended plays where you could have easily just 100x'd your investment. For example, Rome, Phantom, Jewel. Now, Jewel wasn't 100x for a lot of us, but nonetheless, it was introduced to us at a very low price. And so you could easily 10 to 20x your money if you decided to pursue that investment. Now, in addition to the public channels that I also have a few private channels. To access these channels, you'll have to become one of my Patreons. For just 20 bucks a month, you can have access to all of these channels. Number one, you would definitely be assisting me in my comeback. And number two, for the next bull run, it's very important that you guys try to expand your network as much as possible. So if you guys join my private Discord, you'll have a lot of smart, experienced people in the space, providing their insights in here. And also during this bear market, I've taken the time to network and go ahead and consolidate all my alpha channels. And I ended up getting invited to a few different alpha groups. And oftentimes the alpha that I extract from those groups, I'll share it in my private channels. So if you want to go ahead and put yourself in a position to just kill the next bull market, consider checking out my Patreon and supporting the work that I do. With that being said, this is CryptoOneStop signing out. I'll talk to you folks next time. Bye.